The one thing that gives me a little pause when I'm looking at Old Navy is, they have over 1,100 locations. It might even be 1,200 at this point. And the plan over the next few years is to open 800 stores. And from a growth perspective, that sounds awesome. To really meaningfully grow your top line by adding more locations is great, because then you have not only the growth that's coming from same store sales growth, you also have all of this other growth coming as well. But 800 stores is a big jump from where they are now.
So that doesn't worry me that much because of the general contraction in department stores. So they're adding 800 stores. And yes, there's other companies growing, but most of those are discounters. The TJ Maxx companies, Marshalls, TJ Maxx, Home Goods, Ross Dress for Less, Five Below. Those are growing retail companies. This is kind of a uniquely positioned fashion brand that works in almost every market. So if you look and a parent used to buy their kids' clothes at Sears, Old Navy is a very logical substitute for a Sears with a more predictable inventory than many of those stores that I just listed out. So look, I don't know exactly how many, malls and retail areas are appropriate in the country, but 2,000 to me doesn't seem crazy when you look and say, okay, we have an Old Navy here in West Palm Beach that draws locally. We could probably support one in 3 or 4 other towns here. In other, more densely populated areas, I could see there being a few. These aren't stores that you're necessarily going to travel far to go to. And there is kind of just a demand in almost every, middle class or higher community, and maybe even a demand in some struggling communities, because it is decent stuff that's not very expensive.
Yeah, my reason for pause is just that so much of the growth story is built on them building out that footprint. And I look over at Madewell and I say, okay, you have 130-ish stores. The plan is, for every year to add about 10 to 15 stores. So, that's not a crazy growth rate when it comes to your physical locations. The comps are doing well. You're growing, over 20% based on, just that 10 to 15 per year pace. That's pretty solid.
There's also a bit of a digital disconnect here. So it's worth it for a company that's making $50 on a $100 pair of jeans to deal with occasional returns and eating that cost, even to eat the cost of shipping overall. Old Navy, which does have a website, doesn't really push their digital business that much, because if I'm buying 4 items and it's a $45 sale total, you run into some difficult margins when you get into who bears the cost of a return, or do I have to then go to a store to return it? So it's not a super digital friendly model, especially when some of its customer base is a growing, changing size. Its merchandise turns over somewhat quickly, but they could definitely do better of things that are, wardrobe perennials like jeans. They've sold the same model jeans for a lot of years. They could make it easier to buy those online and make it more a part of their model, and maybe they wouldn't need as many stores. And certainly their stores should do everything they can to embrace omni-channel with buy online, pick up in store, and buy online, return in store, because a return where you can try something else on and leave satisfied is much better than repeating the delivery cycle.
Now, Dan, investors cannot get shares of either of these businesses yet. We are talking hypothetically, neither one has actually been fully spun out. Is there one of these businesses that you look at and say, yeah, I'd prefer to own shares of that one, if either?
So the honest answer is I don't like any of these companies enough to own them. If I had to buy one, it would absolutely be Old Navy, because I see a bigger customer base. We don't know what the ceiling is for these sort of boutique, expensive brands, Warby Parker, Untuckit, Madewell. There are obviously only so many people who can buy $100 jeans or $150 jeans. And we've seen top tier jeans brands, True Religion, as a recent example, go white hot and then go sort of ice cold. So I don't like that. I wouldn't bet against the Gap making a comeback, but I do think they're facing sort of pricing issues at what they're charging. And J. Crew, I just, that one seems the almost the worst of them. So, Old Navy, look, my mom can shop there for my son. My son can shop there for himself without, too big a budget. My wife and I might pick up things that we're going to use for sort of incidental ways. It has a broader audience. It's a much more casual spend. To run to Old Navy and buy a pair of jeans and some socks won't cost you $50. That's accessible to a lot of people. And I think accessibility for a retail store is going to be pretty important when you're talking 2,000 locations.
Yeah, I think you're absolutely right. I think folks that are interested in retail should definitely take note of what Madewell is doing. I think that their model here and being kind of digital native is going to be the one that a lot of other brands follow. And their connection to their customers, their loyalty rewards program, all of that kind of stuff is so important for being able to push people to your website so that you can have a retail footprint and have that showroom and be in the big places in all these major cities, but then also be accessible kind of across the globe. Unfortunately, when I look at the numbers for that business, valuation that I've seen thrown around, we don't know for sure yet, is somewhere between $2.4 and $3 billion. At the low end, that puts them at like 45 times trailing earnings, which is a bit rich for me, especially because this space is so fad driven.
Yeah. And as an investor, this is a final warning. We don't know how these companies are going to assign value to each piece they spin off. So the number that's been reported, but it means nothing, is that Old Navy is going to be about 80% of the total value of Gap. But don't buy into the parent company just so you can get a piece of the other one. Wait until they've actually set these numbers and then do an evaluation. And also look at what the added costs are going to be from splitting this stuff up. So this is sort of a very preliminary, are these good brands, not are these good investments? Because until you know the underlying numbers, you really can't tell if they're a good investment.
Yeah, and I think if anyone wants a good visual on the lightning in a bottle effect of retail, take a look at the stock charts from Urban Outfitters or Gap over the last 10 to 15 years. There are those clear moments where the concept caught on, people were really loving it, and there were clear periods where they fell out of favor. And unfortunately, with a lot of these types of brands, that's just the nature of the business. It's hard to stay on top for an extended period of time. Pretty much, there's always a brand new thing that gets people excited.
It's sort of inevitable. And Old Navy is somewhat insulated from that, but they're not insulated from competition and other people seeing their success at a lower price point and going after it. And, you're seeing that to an extent with the Target owned and operated brands. And it wouldn't shock me if some other fashion retailers spun off or created, call them value brands.